Welcome to the 2019 open enrollment for Breckenridge Health. Breckenridge Health partners with Assured Partners, a team of dedicated, experienced insurance professionals that manage your employee benefit package. Should you ever need assistance with a claim, have a question regarding your explanation of benefits, or have a service question, please feel free to reach out to Sue Lofton, Member Service AE at Assured Partners, direct at 270-393-6208, or by email at sue.lofton@assuredpartners.com. Please note that the following slides were designed to provide you with a brief overview of your 2019 benefit package. In the event of a conflict between the carrier summary and this description, the terms of the carrier summary will prevail. In this presentation, we will review the following: benefit basics, medical benefits, value-added services, voluntary ambulance benefit, health savings account, flexible spending account, dental and vision insurance, employer-paid and voluntary life insurance, voluntary short-term and long-term disability, worksite benefits such as accident, cancer, critical illness, and hospital indemnity. You and your eligible family members may apply for benefits if you work at least 30 hours per week. Your benefits are effective on the first of the month following 30 days. If you're an existing employee, you're eligible for benefits effective January the 1st, 2019, as long as you've met your probationary period. Coverage is also available for your spouse and your dependent children through age 26. Please check each type of benefit plan for dependent age eligibility rules. Please note that you and your eligible dependents must be enrolled within 30 days of becoming eligible. Your elections for the plan year will remain in effect for the full year unless you experience a qualifying life event. If you experience a qualifying life event, you may change or cancel your coverage during the plan year to meet your needs. You must notify the Human Resource Department within 30 days of the event date to ensure that there's no disruption of coverage. Qualifying events include birth, adoption, and legal guardianship, divorce or legal separation, marriage, death of policyholder, turning age 26 and aging off a parent's plan, loss of Medicaid, FMLA-related leave, or loss of employer-sponsored group coverage, such as through a spouse plan. For a complete list of qualifying events, please contact your Human Resource Department. Your medical benefits are managed by UMR. This slide reflects the high deductible HSA compliant benefit plan. You have a three-tier structure. Tier 1 is for in-network at Breckenridge Health. Tier 2 is within the UMR network. And Tier 3 is if you were to go to an out-of-network provider. Keep in mind that out-of-network providers, not only will you have a higher deductible, higher coinsurance, and higher out-of-pocket, but you also are subject to balance billing, meaning that provider has not contracted within the UMR network, therefore they can bill you for whatever they would like to bill you for, and you're responsible for that bill. In reviewing the plans that's offered on the high deductible health plan, column 1 reflects the best case scenario, and that's when your services are provided by Breckenridge Health. You have a $2,700 single deductible, $5,400 for family. If you had a really bad year, your overall out-of-pocket or your overall exposure is $4,000 on this plan. That's for Tier 1 and Tier 2. That's the most you will be out for in-network claims for the remainder of that plan year should you have a large claim occurrence. The Tier 1 payout is 80% once you've satisfied your deductible, 20% by you until you reach your $4,000 out-of-pocket limit. The Tier 2, which is the UMR network professional service, once you have satisfied your deductible, it pays at a 70% coinsurance. Your responsibility is 30% up to a total out-of-pocket of $4,000. Everything with a high deductible health plan is subject to your deductible first and then your out-of-pocket limit. The second plan is a PPO plan. With a PPO plan, you have immediate co-payments. Again, Tier 1 is your best, richest offer because its services is rendered at Breckenridge Health. Tier 2 is UMR Network. Tier 3 is out-of-network. With the PPO plan, as you can see, you have immediate first dollar office visit copays. and immediate first dollar specialist office visit copays, as well as allergy injections. And you also have immediate copays for prescription drugs. Your deductible will apply once you're hospitalized, you have lab work or x-rays. If you had a really bad year, your total exposure on the Tier 1 and Tier 2 services are $5,500. So that's the most that you'll be at if you had a really bad claims year. Again, the high deductible health plan is richer in that respect. We always want to make sure that your provider participates in network, so visit www.umr.com. Medical plan change, effective January the 1st, 2019. The cost of air ambulance benefits can run as high as $45,000 or greater. The UMR Group Medical Plan will limit, effective January the 1st, 2019, the maximum payout that the air ambulance benefit under the Breckenridge Health Medical Plan will pay out. The new maximum payout will be limited to $10,000 per covered and approved accident claim. Ground ambulance services will also be paid out as a Tier 2 service for emergency transport. We will review a new voluntary ground and air ambulance benefit that's going to be offered through MESA in the upcoming slides that you will be eligible to enroll in. The MESA benefit will pay your covered air ambulance benefit in full regardless of the ambulance provider or network. Your preventative care on both the PPO plan and the high deductible health plan is covered at 100% in network. That includes immunizations, well women checkups, well child checkup, mammograms, blood pressure tests, cholesterol tests, and certain tobacco cessation products. The provider will have to file the bill as a preventative code versus a sickness code in order for this to be paid out as a in-network 100% preventative care code. We always advise that if you go to have your preventative care services, try to limit that to a preventative care instead of making it a sickness service, because a lot of times that will end up being coded as a sickness and it will be subject to your copays and applicable deductibles. The PPO plan. With the PPO plan, the biggest takeaway is you have immediate copayments for office visits, urgent care visits, prescription drugs. Copayments do not apply towards your deductible. You are eligible to enroll in a flexible spending account. The high deductible health plan. With the high deductible health plan, remember you must first meet your deductible. There are no copays associated. You're eligible to enroll in a health savings account. If you enroll in the high deductible health plan, you're eligible to contribute towards an HSA bank account. The HSA account is set up in your own name. There are no use it or lose it rules. Unused balances roll over from year to year. We will review the HSA account information in further detail on the upcoming slides. You're also eligible for an limited FSA. So if you enroll in the high deductible health plan, you're also eligible for the limited FSA, or that you can use for eligible dental and vision expenses. The out-of-pocket limit for both plans is a bucket that accumulates both your deductibles, any applicable co-pays, all the services will apply to your overall max, and that's your total exposure that I mentioned to you. The best plan for the least overall max is the high deductible health plan. Dependent children are covered through age 26 regardless of full-time studentship or marital status. And we want to encourage you to make sure that your medical provider participates in the UMR network. So to do a search, obviously you would want to go to www.umr.com, as I mentioned in the earlier slide, so that you will not be balance billed by an out-of-network provider. Non-emergent use of the emergency room. In your medical plan document, there's language regarding prudent person lay law, and it states that if you go to the emergency room for a non-emergent situation, carriers can deny your claim. We are seeing carriers denying claims. Now, if your claim's denied, you do have the right to appeal, but we're seeing several appeals being denied as well. So what that means to you is that you may be responsible for the entire emergency room bill if it's deemed non-emergent. So we want to encourage you to seek emergency room treatment for true emergencies. If, however, the condition is non-emergent, we want to remind you to seek care from your primary care provider or an urgent care clinic. The pricing has not changed for 2019 from last year. If you enroll in the high deductible health plan, Breckenridge Health will continue to provide a monthly distribution into your HSA bank account, and we will review that on some future slides. The HSA bank account is associated only with the high deductible health plan. The pricing is listed in this tier. The Buy-It plan, which is a PPO plan that offers the $250 deductible and immediate copay, this is the pricing for that tier. UMR has several online features that we want to review during these slides. When you go to umr.com, you can search for a provider. You can look for the name of your provider. You can do a search regarding just by putting in your zip code, and it will pull up certain providers within a certain mile radius. You can search by categories, places. You can also search by tests and imaging, or even conditions. You can also go to UMR to check on the claim status, so you can pull up your claims activity. You get all the details in one place. You don't have to wait for the explanation of benefits to be mailed to you. Again, simply log into umr.com. Also, you can chat online with a UMR customer service rep, so you don't have to reach them by phone if you have easy access to your computer. One of the features we do want to promote is the Teladoc service. You can talk to a doctor anywhere within 10 minutes anytime, 24/7. It's a virtual visit for non-emergent care, and these physicians are able to call in a prescription to your local pharmacy. So if you're in a rush for time, or if it's after hours, and again, it's a non-emergent condition, we encourage you to use the Teladoc services so that you can be seen. You have to see face-to-face with a network physician, and they can treat you over the phone, and again, you can go pick up your prescription and not have to wait in a provider's office. We do encourage you to go ahead and create your account, and then before you get sick, so that way you already have your login information, and then you will just go to your device, whether it be your mobile phone or your computer with a webcam, and then you can select a doctor, and then your doctor will diagnose your symptoms. If it's a condition they cannot help, you will not be charged for the call. However, if they can assist you with certain things such as colds, flus, allergies, strains, sprains, digestive issues, sinus problems, pediatric care, you'll pay the PPO copayment if you're in the PPO plan, or if you're enrolled in the high deductible health plan, the cost will be $45, and that will apply towards your annual deductible. It's a toll-free number, and again, it's 24/7 access. Also with UMR, you have an Epic Hearing Health Care, where you can receive discounts on hearing products and services. There's a national network of physicians, and you can reach them at the toll-free number. Mesa Medical Transport Solutions. When is your next emergency plan, and are you prepared? We have reviewed times before where you may have an ambulance service to transport you, but not often. A lot of times there's certain networks involved. So what happens when you're transported by a non-network provider? As I mentioned in the previous slides, UMR, with the medical plan document, the most that they're going to pay out effective January the 1st for these types of transports is $10,000. These bills average $45,000 or greater, so that means that the air ambulance or ground ambulance service may be reaching out to you to collect the difference in the bill. So you'll be responsible for that balance bill. So what we want to do is to encourage you to look at the MESA voluntary ambulance benefit. We have two options that are on the table. Note that there's about one EMS call for every 10 people nationally per year on average, and it does, again, surpass $2,000 in most areas, and that's just for ground. Again, the air ambulance goes way up there in several thousands of dollars. And people are blindsided with a larger and larger out-of-pocket cost. Have examples of claims here. Of course, this example is showing a transport with a total charge of $41,000. And again, if the medical plan is going to cap out at $10,000, that would leave you with a $31,000 balance. So we want to encourage you to enroll in the MESA ambulance benefit. Health insurance just simply is not enough. And again, with the MESA benefit, it's not network driven. So if you're a member of the local AIR-EVAC, but yet you get into another state while on vacation and you're in an accident and unknowingly the EMS team or someone out of network is called to treat you, then you're still responsible for that bill. So it gives you peace of mind by having this additional coverage. Membership details, again, we have a dual option that is on the table. We have a Platinum option and Emergent Plus. As you can see by this grid, the Platinum covers a lot of things. If you were to have an accident, it will even assist with, visitor transportation, mortal remains. If you were to be killed in an accident, we hear all the time where, the family's left wondering how they're going to get the body back to be buried because they haven't been advanced the life insurance policy yet. A lot of things just come into play. There is a 90-day waiting period for pre-existing conditions, but the pricing that is on these plans basically will cover you and your entire household. The Platinum plan, being the richest plan, will run $39 a month, and the Emergent Plus plan is the emergent ground transportation, emergency air transportation. That's going to run you $14 a month. Again, little money for such great coverage. There's no deductibles. It's easy claim process. They pay your provider. They do not pay you. So again, it's going to keep you from being balance billed when the medical plan caps out at $10,000. So remember, with MESA, any ground, any air, anywhere. The Health Savings Account. Health Savings Account is a unique tax advantage account that can be used to pay for future health care expenses. When you combine it with a high deductible health plan, it offers savings and tax advantages that a traditional plan cannot duplicate. HSAs are owned by you, the individual, and are unlike a flexible spending account because the HSA funds will roll over and accumulate year after year if not spent, with the ability to earn tax-free interest. HSA funds may be used to pay for qualified medical expenses such as deductibles, co-insurance, prescription drugs, dental and vision care, even the co-pays, long-term care, nursing home, and much more at any time without a federal tax liability. If you enroll in the high deductible health plan, Breckenridge Health will make a $50 monthly contribution, which equates to $600 per year into your very own HSA bank account through the Sicilian Bank. For 2019, the single contribution is $3,500, and then there's a family contribution maximum of $7,000. If you're taking advantage of the maximum contribution, remember that's your overall maximum. You will have to minus out the $600 per year that Breckenridge Health will contribute. A representative with the Sicilian Bank of Hardinsburg will assist with setting up your new HSA account. There are no monthly minimums. A debit card will be provided upon request. Unlimited check writing is available. However, if you use checks, you must pay for checks. And you will receive a monthly statement. With the HSA account through Sicilian Bank, receipts are not monitored. So no shoeboxing receipts. Health Savings Account facts. Who's eligible for an HSA account? Well, you must be covered by a high deductible health plan. You cannot be covered by any other health insurance, even, another spouse, say, for instance, you're enrolled in your spouse medical plan and the Breckenridge plan, that will not allow you to have a health savings account. You can only be covered by this high deductible health plan. You cannot be covered by any flexible spending account or HRA, and you cannot be enrolled in Medicare. You cannot be claimed as dependent on someone else's tax return. Are my HSA contributions 100% taxable for my gross income? Yes, they are. Can I be enrolled in the PPO plan and have an HSA bank account? Okay, let's say, for instance, you enroll in the high deductible health plan this year, and next January, you decide you want to go back to a PPO plan. But let's say you've got $3,000 in your HSA bank account. That money next January is still yours to use at any time for qualified expenses. However, because you enroll in that PPO plan January the 1st of next year, then you can no longer make a financial contribution into your HSA bank account. So again, the money's still yours. When you re-enroll in a high deductible health plan, then you're able to make those future contributions again into the HSA bank account. If I do not use the funds in my HSA account, do I lose them? No, all unused funds roll over year to year. However, again, you must be enrolled in a high deductible health plan to make a contribution. Sample of qualified expenses include acupuncture, artificial limbs, artificial teeth, crutches, insulin, laser eye surgery, physical therapy, speech therapy. A lot of these things simply aren't covered by a medical plan, such as fertility treatment. So there is a list on the IRS.gov website. This is a sample of qualified expenses. Note that your debit card will only allow you to use it towards qualified expenses. If you try to use your debit card towards a purchase such as a big screen TV, it will reject it. Flexible spending account. The flexible spending account allows you to pay for out-of-pocket medical expenses, dependent care expenses with pre-tax dollars through a payroll deduction. On average, an employee can save 25 to 30% in taxes. Now, you can enroll in a PPO plan to be eligible for a full flexible spending account, or you may not be enrolled in any medical plan at Breckenridge Health and be eligible for a flexible spending account. The stipulation is if you enroll in a high deductible health plan, you're only eligible for a limited flexible spending account. And what a limited flexible spending account means is that it's limited to vision and dental expenses only. You cannot use a limited for any medical qualified expenses. Now, that medical FSA contribution has a maximum of $1,500, and on the limited plan, that too has a $1,500 annual maximum. There is a dependent care account, a maximum of $5,000 for any eligible child care expenses. And again, examples of expenses will include deductibles, co-payments, co-insurance, eyeglasses, and dental expenses. Now, with an FSA account, it's not like the high deductible HSA account. The HSA account will roll over and accumulate year after year. However, with the flexible spending account, you must use the funds or you will lose them by the end of the year. Sample of qualified FSA expenses include the following. Sample of limited qualified FSA expenses. Again, if you enroll in a PPO plan and you can, or the high deductible health plan and you're not eligible for a full FSA, this still can be used for your dental and vision expenses. The dental insurance will remain through Guardian. With the Guardian, your network is Dental Guard Preferred. If you go to the www.guardiananytime.com and you search the network, this is your network that you will search to make sure that your provider participates in network. With the dental plan, you have a $50 single deductible or a maximum times 3 per family. For preventative care, such as teeth cleaning, x-rays, it's covered at 100%. Basic services, and we will review that on the next page, 100%. Major care, 60%, and orthodontia at 50%. There is an annual maximum per person of $1,000 per year. The dependent children are covered through age 26 on this plan as well. However, the ortho limits are capped out at age 19. Preventative care includes cleaning, fluoride treatments, oral exams, sealants, x-rays. Basic care includes the following, and major care that's covered at 60% will include bridges, dentures, inlays, onlays, veneers, and single crowns. The ortho limit, again, is 50%. With the ortho benefit, again, it caps out at age 19. The lifetime ortho maximum is $1,000. So that is a lifetime benefit. It does not reset every January the 1st like your annual maximum does. The costs for the dental rates are listed on the grid. Now note, if you're enrolling for the first time, meaning that you previously declined enrolling in the Guardian Dental benefit, there is a late enrollee waiting period as listed on this benefit grid. Vision insurance will remain through Guardian as well. when you go to guardiananytime.com, find a provider, you will search the VSP Network Signature Plan. That's a network that's going to be applicable to Breckenridge Health. That's going to tell you what providers are in network that will not balance bill you for your services because they're contracted with Guardian. The exams copay is $20, and you have a $20 material copay. This is an overview of your in-network benefits. You have an eye exam every 12 months. You have lenses every 12 months. Now, that could be glasses or contact lenses. And you have a new frames allowance every 24 months. Dependent children are covered through age 26 as well. If you were to receive frames, you get a discount for any amount over $115, and contact lenses, any amount over $105. The vision rates are listed on the side here. And again, the pricing did not change from last year as well. Guardian Anytime has an SM Mobile. We want to, everything is electronic now. It's just making it that much easier. Now note that a lot of vision and dental providers do not even need an ID card. You don't have to show your dental provider a paper card anymore. If you feel more comfortable with having something on your phone and you do have a card, you can certainly take a picture with your phone. We encourage that. Or you can just download the SM mobile app at any time. All you have to do is once you download the application, then you can certainly search for providers, you can access your ID cards, you can do customized searches. It's very, very easy, and again, go ahead and download it if you're already enrolled into the Guardian benefit so that you'll have it available for when you need the benefit. The group life and accidental death benefit is also through Guardian. Breckenridge Health provides all Class 1 and Class 2 eligible employees working 36 hours plus per week with employer-paid life and accidental death and dismemberment insurance through Guardian Life. The benefit is paid 100% by the employer, and accelerated death benefit is also included. The accelerated death benefit basically means is that if you are if you incur a terminal condition, injury, or sickness that, despite appropriate medical care, is established to be resulting in your death within 6 months of the date of the claim, you may apply for the accelerated life benefits. Employees may request payment of up to 75% of the life amount, and of course, it will have to go through underwriting review. A lot of times when people are diagnosed with a terminal condition, they do want to get their affairs in order. So that's why this benefit is put into policy. As an employee, you're eligible for one-time your annual base salary up to $100,000 maximum. That is employer paid, so there's no payroll deduction. Your spouse under the age of 70 is eligible for a $2,000 employer paid life benefit, and dependent children 14 days through age 26 are eligible for a $1,000 benefit. There is an age reduction schedule that starts at age 70. In addition to the employer-paid life, Breckenridge Health provides all Class 1, 2, and 3 eligible employees working 20-plus hours per week the opportunity to enroll into voluntary life and accidental death through Guardian Life. The benefit overview is as follows. For an employee, you're eligible to enroll into a $10,000 minimum, $200,000 maximum. The guarantee issue, if you're a new hire under the age of 70, is $150,000. That means as a new hire, you're eligible to apply up to $150,000 without health questions. Anything exceeding that amount, you will have to answer health questions for and will have to be subject to underwriting review. Your spouse is eligible to enroll into 50% of the employee amount with a $50,000 minimum. If you are a new hire and this is your new hire event, the guarantee issue on a spouse is $30,000. Again, it's 50% of your amount, so you'd have to be enrolled in a minimum of $60,000. Spouse coverage terminates at age 70. Dependent children covered live birth to age 13 days are $2,000, and 14 days to age 26 is a $10,000 benefit. Dependent children, again, through age 26, and it's regardless of the number of children for that benefit. With the voluntary life benefit, you have a benefit reduction schedule that starts at age 70. The accelerated death benefit clause is still built into this policy as well should a terminal condition occur. And then sample pricing is listed in this column. If you're age 20 to 29, a $50,000 benefit will cost you $1.25 per pay period. So it's very, very affordable. It's more affordable than what you will find typically when you go into a local insurance office and try to buy individual insurance. Special enrollment notice. At the 2019 open enrollment, if you're currently enrolled in the Guardian Voluntary Term Life Benefit, you may increase your current voluntary life coverage by $50,000, not to exceed the guarantee issue amount of $150,000. So it's a great opportunity for anyone who has an illness that would otherwise keep you from being approved for the additional life insurance. Again, if you're in good health and you wish to enroll for more than that, you may do so, but you will need to answer an evidence of health form. That's a health questionnaire, and that will have to be subject to underwriting review. What if I previously declined the Guardian Voluntary Term Life Benefit and want to enroll now? If you, your spouse, or dependent children previously declined the voluntary term life coverage and wish to enroll at this open enrollment, you will have to complete an EOVI health questionnaire form and be subject to Guardian underwriting review. What if I do not elect the additional voluntary life during this open enrollment? Should you decline during this initial enrollment event or during the 2019 open enrollment and wish to apply at a future open enrollment date, as I mentioned before, you will have to answer health questions on an EOVI form and be subject to Guardian underwriting review. You may be issued the coverage, you may be declined the coverage depending on your health at that time. Voluntary short-term disability. The short-term disability benefit will help protect your income and lifestyle if you're unable to work due to a covered accident or a covered sickness. The benefit payout is 60% of your weekly pre-disability earnings up to $1,000 for any covered off-the-job sickness or accident. The elimination period is 7 days for option 1. That means you're on day 8, your benefits will begin for any sickness, maternity, or accident claims. The maximum payout is 12 weeks. Option 2 has a longer waiting period. That means on day 14, your benefits will pay out. It's for the same duration. And option 3 is when you use more of your PTO time because your waiting period before benefits start will be 30 days. Therefore, your benefit will start on day 31, and it's a 9-week duration. So if you have previously declined this benefit in the past and you're enrolling for the first time, you will have to complete a health questionnaire and be subject to underwriting review and approval. There is a 312 pre-X if you're new to the plan, if you're just enrolling for the first time, and that means if you have a condition that you are being treated for, taking prescription drugs for, within 3 months prior to your effective date, and that particular condition causes you to go on a short-term disability, there will be no payout for the first 12 months. If, however, effective January the 1st, you take out the short-term disability policy and you've not been treated for any pre-existing, then no pre-existing condition clause will apply. Long-term disability. Breckenridge Health provides employer-paid long-term disability to all eligible Class 1 employees. A benefit overview is provided below. For the benefit percentage, you have 60% of your monthly salary to a monthly maximum of $7,500. This will piggyback with the short-term disability policies beginning on day 91, and it will pay you up to Social Security normal retirement age. There, too, is a 312 pre-existing condition if you are new to the plan. Voluntary lump sum long-term disability. Class 1 and Class 2 eligible employees may apply for a voluntary lump sum long-term disability benefit through OneAmerica. If you're electing benefit for the first time at the 2019 open enrollment, you will have to answer health questions, and coverage will be subject to OneAmerica underwriting approval. With the lump sum benefit, once you're diagnosed with a covered disability, long-term disability, it's all dictated by your doctor's notes. The benefits will kick in after 90 days, so on the 91st date. You have an option of option 1 is a $10,000 lump sum payout, option 2 is a $20,000, option 3 is a $30,000. There is an age reduction schedule. If you're age 65, then the benefit will reduce to 70%, and so forth at age 70, 75, 80, 85, and 90. There is a 312 pre-X, which will only apply for those of you who are first enrolling for the first time and you previously declined your coverage. If you're a new hire and you're applying during your open enrollment window as a new hire, there are no health questions. Guardian offers an employee assistance program. We do want to encourage you to take advantage of this. You can receive telephonic counseling 24/7. You can have face-to-face counseling up to 3 visits per household per member per year. There are bereavement counseling, tobacco cessation coaching, EAP wellness, website resources, college planning and resources. You also have work-life assistance and resources, as well as legal financial assistance, including ID theft, financial consultation, legal consultation, and will prep services. They're available 7 days a week, 24 hours a day at the toll-free number. In addition to that service, you also, as I mentioned before, have will prep services, and this helps protect the ones you love. It helps them with advanced health care directives, estate taxes, financial power of attorneys. It helps living wills, resource library, trust wills, all types of estate planning. And again, they're available to you as well. There is a different toll-free number for them, and then a different website address. Allstate worksite benefits. What are they? Supplemental coverage, it pays in addition to your medical insurance, and it pays benefits to you, the insured, so that you can pay your bills when a covered sickness or accident occurs. Allstate pays cash benefits for expenses associated with accidental injury or hospital stays. The group accident offers you 24-hour coverage. It covers major and minor accidents. It has payouts for hospital confinements, medical expenses, dislocations, fractures, intensive care, and much more. We will have the benefit summaries posted to the enrollment portal. Sample and pricing is $4.16 weekly for single coverage. The hospital indemnity benefit pays on your first day of hospital stay of 24 hours or more. It has a $1,000 or $2,000 benefit option, depending on which you elect, and it also has a benefit that gives you a daily payout for your additional hospital daily rates. There's no pre-existing or no pregnancy waiting periods for this, so this is a great plan for you to roll in when you know you're going to have a hospital stay. Sample pricing for the $1,000 benefit for single coverage is $5.10 weekly. These benefits also have a wellness in there. With the medical plan, I mentioned to you that preventative care is covered at 100% as long as the doctor files it with a preventative care code. Once you have that preventative care done, then you can certainly turn around and file a claim with Allstate and get paid for your wellness visit. The Allstate also offers a cancer product, and I have another slide that will come up next to review this in greater detail. But it covers radiation, chemo, surgery. It has 29 other specified diseases, ICU benefits, hospital, hospice, confinement and care, and wellness. For the single coverage into the single cancer plan, it's $4.85 weekly. And then you have a critical illness option, which offers you a $10,000 or $20,000 initial diagnosis benefit. It's paid out in a lump sum benefit to you should you be diagnosed with a covered critical illness, such as heart attack, stroke, bypass surgery, renal failure, organ transplant. It also has wellness benefits built in, and if you're, for example, age 33 and non-tobacco usage, it's $1.63 per week. So to take out this plan is certainly a smart choice because none of us know what the future holds. There is a 12-12 pre-X, and what that means is if you're enrolling for the first time January the 1st outside of a new hire event, and you've been treated for one of these conditions within 12 months prior to your effective date, there's a 12-month elimination. But if it's a new, untreated diagnosis that occurs after January the 1st, there's full coverage. There's no pre-existing clause. The slide that I wanted to review with this is the cancer with ICU air ambulance. We've had this in Breckenridge Health previously. It's still a great policy to have because on top of the underlying cancer policy that pays you for your cancer treatments, your hospital stays, your medical imaging, your second opinions, your bone marrows, and so forth. On top of that is the air ambulance that, again, is non-network. It will pay your actual charges to the hospital, whether it's a ground or air ambulance for either cancer-related, sickness-related, or accident-related. But the key is that you have to be admitted to the ICU straight from your air ambulance flight. So if you have that, it's going to pay your true charges. The difference between this and the MESA benefit is that this has that one stipulation. You have to be admitted to ICU, a direct admittance. With this plan, the sample weekly cost is $4.85 for single coverage. It's still an excellent plan to be enrolled in. Both are going to have payouts. Both of them are non-network related. But if you want the truly worry-free, the MESA benefit, should you not be admitted to ICU immediately, then the MESA benefit may be for you because that language is not included in that product. As a reminder, this is your annual open enrollment. You must keep all of your elected benefits in place until the 2020 annual open enrollment unless you have a qualifying life event. With a qualifying life event, you have 30 days from the date of the event to submit your paperwork to Human Resources. Your SBC is available for you to, should you wish to have a copy. It's an ACA document that came out with the Affordable Care Act, and it's 7 or 8 pages that basically will give you a simple and consistent information regarding your health plan. It's a little more difficult to understand than a normal summary of benefits, but you can certainly request one from your Human Resource Department should you wish to have a copy. Thank you for your attendance to the Breckenridge 2019 Open Enrollment presentation.